Welcome to my channel. I'm Scott, and in this video we're going to go through 3 semiconductor stocks. The first is Taiwan Semiconductor, the second is Broadcom, and the third is Texas Instruments. Let's start off with Taiwan Semiconductor. Let's get started with the model. This is a large cap company, 529 billion market cap. They're trading at 102 a share, and they have 5.2 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow was high in 2021, 8.4 billion. Then it doubled in 2022 to almost 17 billion. It has come down a little bit in the trailing 12 months to 12 billion. Still a ton of free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses, and that doubles from 16 billion to 32 billion. Revenue is the sales for the company, and that grows a lot from 42 billion to 73 billion. Here's the company's latest income statement. This is for the full year 2020, 2021, and 2022. They report their financials in new Taiwan dollars, but they did add a column for US dollars for 2022. A quick way to convert from new Taiwan dollars to US dollars is to divide by 30. So this is 915 billion new Taiwan dollars. If you round that down to 900 billion, divided by 30 is 30 billion. So you can see it's roughly 30 billion US dollars. Their revenue in 2020 was 1.3 trillion, then 1.6 trillion, then 2.3 trillion. That's in new Taiwan dollars. When you convert 2.3 trillion, that comes out to 74 billion US dollars, their highest ever for a year. Let's get a breakdown of their revenue so we know what it is. Of the 2.3 trillion of revenue, 200 billion is from Taiwan, 1.5 trillion in the US, 245 billion in China, 123 billion in EMEA, 119 billion in Japan, and 72 billion for other countries. This company is the largest foundry in the world. They're about 50% of the foundry business. A company like NVIDIA is fabless, meaning they just design the semiconductor chips. And they have companies like Taiwan Semiconductor manufacturing them. So foundries manufacture the semiconductor chips. Fabless companies just design them. Some companies do both, like Intel. Intel is a foundry and a fabless. But Intel is definitely not fabulous, not anymore. Of the 2.3 trillion of revenue, 900 billion is high performance computing, 900 billion of their chips go into smartphones, 200 billion Internet of Things, automotive 116 billion, and that's a growing market. That's going to be huge in a few years. Digital consumer electronics 56 billion, and other items 74 billion. Here's their revenue with percentages. 2/3 of their revenue comes from North America, mainly the US. 11% in China, that was 17% in 2020, 11% in Asia Pacific, and 5% in Japan and EMEA. High performance computing was 440 billion in 2020. It's over 900 billion, 41% of their revenue. Smartphone revenue has increased, but not as much as high performance computing. Smartphone revenue was 48%, now it's down to 39%. IoT is 9%, automotive 5%. That's almost tripled from 2020's level. Electronics 3% and other 3%. The cost to generate the 73 billion of revenue was 30 billion. So their gross profit is 44 billion. Really solid margins, about 60%. Research and development is big for this company, 5.3 billion. G&A 1.7 billion, marketing 300 million. Operating expenses 7.3 billion. So their operating income is 36 billion. So they have a 50% operating margin. They convert 50% of their revenue into operating income. Amazing margins. After some miscellaneous expenses and taxes, their net income is 32 billion. 1 trillion new Taiwan dollars, which is almost double 2020's level. Earnings per share in 2020 was 20 new Taiwan dollars, 2021, 23, 2022, 38. Amazing growth. In US dollars, it's $1.25. Let's look at the capital structure. 98 billion of equity, 28 billion of debt. They're 78% equity, 22% debt. Their net debt is negative $23 billion. That means they could pay off all the debt with the cash on their balance sheet instead of $23 billion of cash left over. I gave them a WACC of 9%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $511 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $434 billion. We divide that by 5.2 billion shares, and we get a calculated stock price of $84. They're trading at 102, so they're trading at a 22% premium. It's a sell according to the model. Let's look at Taiwan Semiconductor on Simply Wall Street. It's trading at 102, 486 billion market cap, up 19% in the past year. Here's the stock price since they started trading. It looks like they started out in 1997. Their highest stock price is 134. That was in the first quarter of 2021. That was when the stock blew up in 2020, 2021. It did come back down a lot. By the end of 2022, it was down to $62. Now it's back up to over 100. Simply Wall Street's value is $55. They say the stock is 86% overvalued. Their trailing 12-month revenue in 2012 was 444 billion new Taiwan dollars. It broke through 1 trillion for the first time in mid-2018. It broke through 2 trillion for the first time in September 2022. I have a feeling it's going to hit 3 trillion next year. For such a large manufacturing company, they don't seem to have that much debt. They currently have 3 trillion of equity, 862 billion of debt. That's in new Taiwan dollars, so it's roughly 28 billion US dollars of debt. Their dividend yield is 2.1%. Payout ratio is 29%. Payout ratio is dividend over net income. The industry average is 1.1%. They're paying their next dividend in October. They pay $12 US per share, earnings of $39, so they can easily cover their dividend. You can see they've been raising their dividend each year since 2012. This is their dividend yield since 2012. It was highest at 3.7% in 2019. It did come down to 1.6% in 2021. The forecast is for their yield to be 2.6% by 2025. 52% of the companies held by institutions, 41% by the general public, 6% by VC and private equity firms, and 0.4% by insiders. The biggest shareholder is the National Development Fund. The Saudi Arabian government runs this fund. And this company was founded in 1987, so they've been around 36 years. Their employee count has grown a lot over the years. It was 38,000 in 2012. Now it's at 65,000. And their ticker trades on the Taiwan Stock Exchange, New York Stock Exchange, Mexican Bolsa, Deutsche Börse, London Stock Exchange, the Wiener Börse, Bulgaria, Buenos Aires, and also the Sao Paulo Bolsa. The second company we're going to look at is Broadcom. Let's get started with the model. This is a large cap company, 339 billion market cap. They're trading at $8.22 a share, and they have 412 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow looks really good. It grows from 11.6 billion to over 17 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that grows a lot each year from 3 billion up to 14 billion. Revenue is the sales for the company, and that also grows each year from 24 billion to 35 billion. Here's their income statement for the latest quarter, the 3 months ending 4/30/2023. Revenue of 8.7 billion, up from 8.1 billion last year. 6.7 billion of their revenues in products, 2 billion in subscriptions and services. Let's get a breakdown of the revenue. Of the 8.7 billion of revenue, 2.2 billion is in the Americas, 5.6 billion in Asia Pacific, and 900 million in EMEA. In the Americas, only 1/3 of their revenue is in products. In Asia Pacific, almost all their revenue is in products. In EMEA, it's closer to a split, a little more in products. In order to generate the 6.7 billion of product revenue, it cost them 2 billion because they have to actually buy the products and also payroll. Subscriptions and services, the 2 billion of revenue, it only cost them 158 million. It's almost all margin. That's where the profits are in the services, the recurring revenue. Amortization is $441 million, so total cost of revenue $2.6 billion, which is a little lower than last year, and they had higher revenue this quarter, so their margins are improving dramatically. Gross profit is $6.1 billion, last quarter is $5.4 billion. Research and development was $1.3 billion, SG&A, selling general administrative expenses, $438 million, and amortization, $348 million. So operating expenses, $2.1 billion. Operating income, $4 billion, up from last year of $3.4 billion. They spent $400 million of interest on their debt, a lot lower than last year. So their net income was $3.5 billion compared to last year of $2.6 billion. Their EPS is up a lot from $6.16 to $8.39. And they did increase their shares outstanding. They had 408 million last year, and now it's 415 million. Let's look at the capital structure. 22 billion of equity, 39 billion of debt. They're 36% equity, 64% debt. Their net debt is 28 billion. So they have about 12 billion of cash on their balance sheet. I gave them a WACC of 10.3%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 282 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $250 billion. We divide that by 412 million shares. And we get a calculated stock price of 608. They're trading at 822, so they're trading at a 35% premium. It's a sell according to the model. Let's look at the company on Simply Wall Street. They're trading at 822, 339 billion market cap. The stock is up 62% in the past year. Broadcom designs, develops, and supplies various semiconductor devices with a focus on complex digital and mixed signal complementary metal oxide semiconductor-based devices and analog 3.5 based products worldwide. Here's their historical stock price since they started trading in 2009. Their lowest price point was $15. Their highest was $886. Simply Wall Street's valuation is $510. They say the stock is 61% overvalued. 25 analysts priced this stock and the average price target is $873. They say the stock is 6% undervalued. Their trailing 12-month revenue in 2012 was $2.4 billion. It tripled 4 years later to $7 billion, then doubled the following year to $15 billion. Then from 2017 to 2022, it doubled again to $30 billion. It's currently at $35 billion in the trailing 12 months. Since 2018, they've had more debt than equity. They didn't have any debt in 2013. They added debt for the first time in the beginning of 2014. But they generate a ton of free cash flow, so they can afford the interest on the debt. Their dividend is 2.2%, which is a 54% payout ratio. The dividends per share are $18. Their EPS is $33, so they can easily cover their dividend payment. You can see they've been raising their dividend a lot since 2012. It was only 60 cents per share in 2012. The forecast is by 2025, they're going to pay over $21 per share. And their yield in 2012 was 2%. They were close to 6% in 2020, probably because the stock price declined around that time. And the forecast is for the yield to be 2.6% by 2025. This is not a good sign. In the past year, there's been lots of insider selling, no buying, and a lot of different individuals have been selling. 83% of the company is held by institutions, 16% by the general public, and 1.5% by insiders. Capital Research is the biggest shareholder at 19%. They've been adding lots of employees over the years. It was 3,600 in 2012. It's currently at 20,000. It was as high as 21,000 at the end of 2020. It looks like they laid off some people. They trade on the London Stock Exchange, Deutsche Börse, Mexican Bolsa, Wiener Börse, the Nasdaq, EuroTLX, the BATS Europe, Sao Paulo Bolsa, and Buenos Aires Stock Exchange. Let's look at the third and last company, Texas Instruments. Let's get started with the model. This is a large cap company, 151 billion market cap. They're trading at 168 a share, and they have 899 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow was highest in 2021 at $6.3 billion. It is down to $4.4 billion in the trailing 12 months. They might be investing a lot back into CapEx, which is why they have lower free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that was highest in 2022 at $8.7 billion. It's $8.3 billion in trailing 12 months. Revenue is the sales for the company, and that was highest in 2022 at over $20 billion. It came down a little in the trailing 12 months to $19.5 billion. Here's their most recent income statement, the first quarter of 2023 versus the first quarter of 2022. Revenue is down from $4.9 billion to $4.4 billion. Let's get a breakdown of the $4.4 billion so we know what it is. Of the $4.4 billion, $3.3 billion of the revenue is analog devices, $800 million embedded processing, and $258 million of other. Of the $4.4 billion of revenue, $555 million in the US, which is 13%, $1.8 billion in China, which is 41%. The rest of Asia, $549 million, Europe, Middle East, and Africa, $1 billion, Japan, $289 million, and the rest of the world, $169 million. Their revenue is down a lot in China, from $2.5 billion to $1.8 billion. That's the main reason their revenue went down from last year. Because revenue is up in the US, it's also up in EMEA, and it's also up in Japan. To generate the $4.4 billion of revenue, it cost them $1.5 billion. These are the costs to buy some of their products and materials, supplies, payroll. So their gross profit is $2.9 billion, down a lot from last year of $3.4 billion. They spend a lot in R&D, research and development, $455 million. SG&A, $470 million. So their operating profit is $1.9 billion. Net income $1.7 billion, so their EPS is down from $2.37 to $1.87. They are decreasing their shares outstanding. They had 923 million last year, now they have 907 million. Let's look at the capital structure. 15 billion of equity, 10 billion of debt. They're 60% equity, 40% debt. And they could pretty much pay off all the debt with the cash on their balance sheet. They have nearly 10 billion of cash on their balance sheet. I gave them a whack of 10.5%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value of all cash flows past year 4, that's 128 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $108 billion. We divide that by 899 million shares. And we get a calculated stock price of 121. They're trading at 168, so they're trading at a 39% premium. It's a sell according to the model. There are 62 companies in the semiconductor industry. If you see a number in red, that means they're worse than the median. A number in blue means they're better. So Taiwan Semiconductor spends the most in CapEx because they do a lot of the manufacturing. They spend $37 billion. Intel also spends a lot at $28 billion. Texas Instruments spends $3.3 billion. Broadcom doesn't spend that much, only $460 million. Broadcom is the most leveraged of all the companies. Their debt to equity ratio is 1.8. That means for every dollar of equity, they have $1.80 of debt. Taiwan Semiconductor isn't so bad at only 0.3, so they only have 30 cents of debt for each dollar of equity. All three companies pay a higher dividend than the average and median. Texas is the highest at nearly 3%. Broadcom generates the most free cash flow out of anybody on this list. Taiwan Semiconductor is second. Last year, Taiwan Semiconductor was the largest company on this list. Now Nvidia is back to number 1. Nvidia is just so overpriced. But as much as I want to short them, I probably wouldn't because I don't trust the market. The average price to book in the industry is 5.5. Taiwan Semiconductor is pretty much right there at 5.4. Generally, the lower the better for price to book. The way you calculate price to book, it's stock price over book value per share, or market cap over equity. Broadcom is really weak in this category. Of course, Nvidia is the weakest because they're so overvalued. In terms of PE, Taiwan is really good at PE at 16. They seem pretty undervalued. Texas also has a good PE at 18. Broadcom's at 24. That means investors are paying $24 for $1 of earnings. PE is stock price over earnings per share, or market cap over annual earnings. Broadcom has an amazing price to free cash flow of 19.8, better than the median average. Texas is 34, Taiwan 44. All three companies have a worse price of sales than the average and median. Taiwan is the best at 7.2. Taiwan generates the most revenue out of any company on this list. Intel used to be number 1 in revenue. Now they're number 2. Look at Intel's price of sales, 2.5. That means the stock is extremely undervalued. The reason more people are not buying Intel is because they keep losing market share. I used to think it was a great investment, Intel. Now I'm not so sure, because they just keep falling further and further behind when you compare them to these other companies like Nvidia and AMD. Intel can't do anything right. Taiwan is such a better foundry than Intel. Nvidia is such a better fabless than Intel. Taiwan has a really solid 5-year annual revenue growth rate of 17%. Broadcom 12%, Texas only 5%. If Taiwan was in the United States, their market cap would be over $1 trillion. Their 5-year annual revenue growth rate is pretty similar to Nvidia, and they generate triple the revenue and about 2.5 times the free cash flow. Life is just not fair if you're a shareholder of TSM. Why can't you get the love that Nvidia shareholders give them? Let's look at Texas on Simply Wall Street. They're trading at $168 a share, $152 billion market cap. The stock is up 7.5% in the past 52 weeks. Texas designs, manufactures, and sells semiconductors. Their lowest stock price ever was $1.46. Their highest was $200, and that was back in 2021. They were trading over $90 in 2000. And they didn't really grow from 2000 to 2017, still trading at $90. But they've done well the past 5 years, as most semiconductor stocks have done. In 2020, they were trading at $100 a share, and they broke through 200 in 2019. From mid-2021 to mid-2023, the stock has declined about 10-15%. Simply Wall Street's valuation is 72. They say the stock is 130% overvalued. 27 analysts price this stock, and the average price target is 181. They say the stock is 8% undervalued. Their trailing 12-month revenue in 2012 was $13 billion. In 2020, it was still $13 billion. But they did break through $20 billion in 2022. Not as much revenue growth as the other two companies we looked at earlier. Their equity is always higher than their debt. Both have increased the past couple years. Their dividend yield is 3%, 53% payout ratio. They pay $5 in dividends per share, earnings of $9, so they can easily cover their dividend payments. They raised their dividend each year, was only 68 cents in 2012. The forecast is for them to pay $6 per share in 2025. And their yield is pretty steady. It's between 2.5% and 3.5% the past decade. The forecast is for the yield to be 3.5% by 2025. In the past year, there's been 4 insider sells, 1 buy. 87% of the company is held by institutions and 13% by the general public. Their biggest shareholder is Vanguard at 10%. Their employee count is pretty steady over the years, 34,000 in 2012, 33,000 in 2022. They trade on the Nasdaq, Deutsche Börse, Mexican Bolsa, Xetra, Santiago Stock Exchange, the Euro TLX, London Stock Exchange, Wiener Bourse, Bulgaria, BATS Europe, Buenos Aires, and Sao Paulo Bolsa. So let me know what you think of the video. Leave a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.